The rise of the unit market is keeping the Greater Sydney market busy, although below the exceptional levels seen in some of the other market jurisdictions across Australia. Unit markets are considerably more positive than house markets in our most expensive capital city, and the market share of attached dwellings continues to rise. In our latest analysis, well over half of all residential sales across Greater Sydney are now attached dwellings. In most of the Greater Sydney municipalities where sales activity is strong, it's the unit markets that are most active. Outer ring house markets are generally subdued, suggesting that those seeking affordable options are choosing apartments and townhouses. The dominance of attached dwellings in the Sydney market performance can be seen in various metrics resulting from our most recent analysis of activity. While 45% of locations with house markets have positive rankings in our latest analysis, 67% of unit markets are positive. This includes 24% of house markets classified as rising markets, in contrast to 37% of unit locations that are rising. And this coincides with further evidence that a growing share of dwelling sales in the Greater Sydney market are indeed attached dwellings. Comparing the June quarter results in the past 4 years, the market share of units was 48% in 2021, 50% in 2022, 52% in 2023, and now 54% in 2024. So the latest quarter has shown a resurgence in sales activity in Sydney, inspired by rising demand for attached dwellings. In the city of Sydney, LGA, 2/3 of suburbs have positive ratings, headed by the unit markets in the Sydney CBD and in suburbs like Surrey Hills, Waterloo, Chippendale, Darlinghurst, Redfern and Elizabeth Bay. They're all rising markets. In the Canterbury Bankstown LGA, which has recorded a steady rise in sales volumes over the past 18 months, 60% of locations have positive ratings, and most of them are unit markets. And those with rising sales activity include the unit markets in suburbs like Bankstown, Belmore, Canterbury, Campsie, Kemba and Wally Park. The city of Parramatta also fits this pattern. 2/3 of markets have positive ratings, and 10 of the 13 ranked as rising markets are unit markets, headed by North Parramatta, Sydney Olympic Park, Timgabby and Westmead. Top 10 municipalities that contribute to Pump Strongly include the Wallara local government area, where there have been steady increases in quarterly sales over the past 18 months, including the apartment markets in Double Bay, Vaucluse and Edgecliff. They're all rising, while those in Rose Bay, Wallara and Paddington have consistent buyer demand. The city of Randwick is also very consistent with its sales levels, boosted by rising activity in the unit markets of Kensington and Matraville, the house market in Randwick and both houses and units in Maroubra. The city of Waverley, another place with steady quarter by quarter sales, the leading locations with rising sales of the unit markets in Bondi, North Bondi, Bondi Junction and also Waverley. The outer areas of Greater Sydney, the Sydney of Penrith at the western fringe of the Greater Sydney area has recorded a recent upsurge in market activity, and 6 out of 10 markets there have positive rankings. Rising locations include the house markets in Jamison Town, Kingswood, Penrith, St Mary's and Werrington, as well as the unit markets in Collerton, Kingswood and St Clair. But the city of Liverpool is where house markets are doing best, amid a general upturn in sales volumes led by Green Valley, Moorebank, Prestons and Wattle Grove. And the unit market in the central suburb of Liverpool is also notably strong.